Right, so today's call is going to be about hedging, the advantages, disadvantages, how to do it, the safest way to do it, and how I do it. How I think for me it's the safest way. I'm not a financial advisor, this is not trading advice. This is just me sharing how I do things. It may not fit into your risk management, and you need to then figure out how best to hedge for yourself. Just want to set up my phone again and get it to the correct place, and then we can connect again and get started. Great. Okay, so I had an interesting question this morning from a client who's got a very big account, and the question was, what is the advantage of hedging and why does one do it? Okay, so it's a great question. So let's say, let me do it here rather. Right, at an all-time high. Let me do it there. Right, cool. Okay, it's better. I like to do things on my phone. It's just easier for me to manage. I wonder why it does that, how to do that. Okay, can I press enter? Great. Okay, cool. Right, so this is how hedging is supposed to work for Alan. This is, let me delete that, let's rather use this. Okay, this is candle 1, this is candle 2 that is opened below the 8 EM. Sorry, this is candle 1, this is candle 2. Don't know why it says 2 there. Let's do 1 and let's do 2. Okay, cool. All right, so let's expand this. Everything's in disarray this morning because I had to actually reformat my Mac. It was so slow. Right, so I like to hedge. I know, generally speaking, that the trend has reversed when either the second candle is above or below the 8 EMA. I don't really like to take short positions on gold because gold is a storage of value. That means it is always going to be increasing in price, and if you're taking short positions, especially at the bottom of a trend, you're probably going to be stuck. I'm probably going to be stuck in that with that sell trade. Can be for weeks or months. Like this trade over here, I've been holding it since April. Lucky for us, we don't pay swap fees. If you are paying swap fees, you need to get hold of me and we can eliminate all the swap fees for you. Side note, swap fee is a charge that the broker charges you for holding a trade over a 24-hour period. So as you can see here, no swap fees. Now, my robot hedged, but it was right at the bottom of the trend, and I actually thought that the trend was going to go south. I was listening to other people at that stage and trying out a new strategy, learning supply and demand zones. I'm a very fast learner and I take knowledge on very quickly. And because I've been trading for such a long time, I worked out that that strategy that I was following or learning was not the correct way to actually draw supply and demand zones. But I still think the price is going to reverse there and I'll be able to then close out this trade maybe with a $500 loss or zero. It's important for me to tell you everything so that you can understand why I do things and the strategy that I use. Then I'm going to go into questions and answers afterwards. Okay? So I'm just waiting for the price to come down. It started to come down, and the reason I haven't closed it yet is because I still feel that gold is going to reduce in value until February. Just my own opinion. I could be wrong, but that's what history has told us. And it's such a small trade for me that I don't really mind. It's I don't know, as a percentage, what is that of the account? 60,000. You guys work it out. and then let me know. So the second candle opens below the ATMA. For me, that is the correct time to open a hedge. Now, a lot of you are using either the 8 EMA indicator, my paid indicator, which has a hedge functionality built into it, or you're using the EA. So they both have the same functionalities. So when you look at the hedge settings of the robot, it's in section 10. Let's just get down here. You have options. You can either hedge buy trades, or you can hedge sell trades, or you can let the robot decide what it needs to hedge. The functionality also is available for you to hedge manual trades as well, which is called hedge non-rule 2. Non-rule 2, there it is, hedge non-rule 2 trade. So that means anything that you use on your account other than my EA. Maybe you've downloaded MetaTrader 4 on your personal computer terminal at home, and you're running a secondary EA. This functionality will then hedge those trades as well if you wanted to. Just a side note. So let's just go through the different ways that you can hedge. Now, the reason I do this hedging the way I've done it is because, which is at drawdown. The default and my presets are set to hedge at drawdown. I've done that specifically because most of the traders here don't understand hedging, and they don't understand the benefit, the advantages and the disadvantages of hedging. So I've said, all right, let's rather do it at a drawdown, which normally we don't get to. But on the side note, being hedged is 100% a certainty. You need to get over that fact. Or you need to change your trading strategy and go back to using your usual methodology of trading. The hedge is an advantage, okay? What it does is it freezes your account if done correctly. So if we go to the phone now and we look at the trades, let's go over here. Let's go, let me open up a new VPS. I don't actually like working on my live account. Okay, there we go. Okay, right. So let's do it together. Okay,
Incoming
set
mail.
up the robot with a high lot size, and then I can show you why it's a great idea to hedge. So we're going to do automated lots, and we're going to set this at a 20 lot, which is massive. So we're going to do eye exposure. I like to change my color to white. What this indicator does is it tells you what your net lots are. I don't know why it's hedged. There's something wrong here. I don't know why it's using the creating new bars for some reason. This
So you haven't hit your drawdown.
Oh, no, it's this. Okay, cool. No, that's not right. So this flaw has been fixed. Let me explain to you what's going on so that you know, okay? If you use the same magic numbers in your hedges, the robot continues to open up trades until you run out of equity. So you must we have fixed it on the new version, but make sure that your hedge magic numbers are different to your buy and your sell lots. Okay? So I'm just going to click on OK, pause the robot, and close out all my trades so that we can do this again properly. Okay. There we go. No. switch on. There it is. There's the sell. Okay. We are now hedged. Now look here. Look at your drawdown. These numbers are moving, but your drawdown is frozen. Now, the reason it's frozen currently is because if we look at the phone and we go here, the spread is 4.4. When the spread widens, your drawdown will start fluctuating. And that happens, obviously, because the buy and the sell is different now to where these hedges were placed. So now there's a discrepancy. It's only like 15 cents per lot. This is actually 44 cents per lot. Okay, that's what this is. That's what this means. It's 44 cents per 0.01 lots. If you go to a 1 minute chart, you'll see it where there is a difference between the red line and the white line. It's the bid and the bid and the ask. Okay, there. Okay, and you can see there 96 minus 35 is 44 cents. Now, do you understand that part? This is where you guys need to be interactive with me. When I say, do you understand, yes, you need to be answering me so that I know that you understand exactly what we're doing. Okay?
Yes, understand. Thanks.
Okay, cool. No problem. Okay, so we go back to the 15-minute chart. That's where we were trading. And we can see here that we have, it opened another hedge because I changed time frames. If I change the time frames again, it will open another hedge. So I'm just going to 26.25. It's buy, sell. So we'll just close these out. Cool. Okay. It's because the reason it's doing that, it's a replacement trade because I've got replacement trades on true. So immediate execution, let's just change that to false. Click on OK. No trade will open. I'll close this out and no trade will open. And now we're still 100% hedged. Okay. This is where understanding the robot is critical. Why trades are opening and how to save your account and not get into more trouble, especially when you're under pressure. Because when you get hedged or when your drawdown starts to get high, you start getting pressurized and then you forget shit and your brain doesn't function like it should. You think things are slowing down, but your mind is so mixed up and you're not quite sure how to do things. So you need to understand these settings very, very well so that you don't get yourself into trouble. Right. So to get back to the hedging strategy, the second candle has opened theoretically in our example below the ATMA here. Okay. Now, with such large candles, the chances of the price going further south are very high. Now, you don't have to hedge 100%. You can hedge 25%, and that's what the robot has, that functionality in it. So if you want to, you can go down to section 10, and here you can set this over here, the multiplier, this multiplier to 0.25. That means that the robot, when it's time to hedge, is going to hedge only 25%. Okay? And then you can change this to true, your secondary drawdown, to let's say do it at drawdown, and you do it at 25%, 25%, and hedge drawdown percentage. So yes, it's right. We want it at percentage, so we want it at 0.06%. Okay, so we'll do that again. Just let me change the lot sizes here so that we can speed the hedging process up. MM20, MM21. Okay, cool, great. So we'll close out these trades. And there's the one. I don't know why it's opening a one lot. There it is. Okay. So there's your first hedge, which is 25% of the one lot. And then the second hedge kicked in almost immediately because your drawdown is above 0.06. So now you have a second hedge, okay, of 25%. So now you're hedged 50%. And this you can do at various different drawdowns. So maybe when your drawdown gets to, I don't know what your comfortable position is, 5%, 10%, you can then start staggering your hedges. And then if the price retraces, or when the second candle opens above the 80 EMA, you're not stuck with a massive hedge right at the bottom because you got it wrong. Let me give you the example so that you understand. Okay. So this is the point at which the robot hedge. Second candle opens below the 80 EMA. Okay, only 25% of your lots got hedged when the second candle opened below the 80 EMA. Then you set your secondary hedge to hedge at a, let's say, another 25%. So maybe your second hedge kicks in when your drawdown gets to there. And then what happens is, let's say hypothetically, so let's say your secondary hedge kicked in there, right? So there's your trade, okay? Then you have your 8 EMA, okay? This is your 8 EMA, and your the 8 EMA catches up, and then let's say hypothetically you get a green candle. You get one green candle, and then you get a second green candle and a third green candle. Now this trade, this sell trade, is in a negative, but it's only 25% of your lot sizes, so it's not such a train smash. And this trade over here is in positive. So your one hedge is blue, and your other trade is red. Are we on the same page?
Yes.
Okay, cool. So what you can do, because the second candle is opened above the 80 EMA, this is on a 4-hour chart. I'm trading on a 4-hour chart. Okay, I read things on a 4-hour chart. This is a sell trade. Let me put it there for you. Sells, so red. There's your sell hedge, and it is blue. Okay, it's in profit. Why? Because it's a sell trade. Okay, and it's in profit because the price is here. Here's the price. Let's put an arrow there so that you can see where I am. There. Okay, at that point, the price is below the where the trade opened, so it's in profit. Does anybody not understand? It's critical now that you understand so that we can communicate. So everybody understands. Thumbs up, please. Use your emojis, or thumbs down. Okay, cool. So now this is my strategy. I close this hedge. It's in profit. I close this hedge. It's gone. Closed. Bang. Gone. I've made profit. That money is banked. Okay. My drawdown is less. Now what you can do is that you can now manage this trade. You can use your profits that you just generated to partially close this trade. Let me show you. Okay, so we'll go to the MetaTrader 4 where we've made profit for today. Okay, custom today. I hope we're in profit for the day. Okay, so we've made $256 profit for the day. Don't know why. Oh, right. Okay, cool. So now I can start offsetting my hedge. So it was 0.25 lots of sell. So I can now, okay, modify the order, and I can say modify order. Okay, so I can close, partially close. I want to, you can't see this on the computer, I don't think. So 0.01, Let's see. Yeah, you see, you can't see this on the computer. Give me 1 second and let me set this up on my phone. This is the one unfortunate part of MetaTrader 4 on the computer. You can't see this. Right, so here are the trades. Okay, so we want to offset one of the trades by X percentage. So here you can change the lot sizes to 0.01. You need to focus here, okay? Because if you get the lot sizes wrong, you can close this trade out in its entirety, which is an error. And I've done that before, lost $35,000. You saw me do it, and I was honest with the community, and I told you what I'd done. I'm human, and it happens. You need to be aware that this can happen. So you need to double check. Don't take drugs. Don't drink alcohol. Do this preferably in the morning when you have your wits about you and you are fresh and you have thought about this. Okay? Because this can go wrong quickly. So now we want to understand, if we close out 0.01 lots, how much money is that of the profit that I've made? So let's say I've only made $3 on that hedge. This over here tells you what the amount of money you're going to lose on your account when you close out this hedge partially. This is called partial closing of the hedge. Okay? You can't see this amount on MetaTrader 4. If I increase this to, let's say, 0.01, it changes from 5 cents to 50 cents. If I change it to 1, it goes to, well, I can't because the trade is only 0.25. Okay? So 0.1 is 56 cents. 0.01 is 5 cents. So if I close it, look here, watch here. Okay? It'll close and it'll say 0.24 close. Okay? There, 0.24. So now I've used some of my profit to start closing out that hedge now that's in negative. You need to do this like as fast as possible, because when the second candle opens above the ATMA, you know that the trend is reversed and the price is going to go north. And then that hedge, that sell hedge, is just going to go red, and it's going to start affecting your equity. And you're unhedged, because now you've got a sell hedge and you've closed your buy hedge in profit. So you can either close it out 100%, or you can close out partially, or don't close out the buy hedge and rather strip away both at the same time. So let's say you had the buy hedge open. Okay, you didn't close the buy hedge because there's the buy hedge. Oh, where's the buy hedge? Let's say, for instance, this is a 0.25 buy trade. Okay, so you do the same thing. You say here 0.01 is equals to 1.35 cents. So if you close it, okay, 0.01, your buy hedge, you're still 100% hedged. So now you're stripping away, using new profits, you're stripping away old trades. This is the safest method for you to save your account. It's a zero-sum game. Doing it this way means you don't make profit, you don't make loss, but you've protected your equity. So let's say, for example, you have made $10,000 and now you get hedged at 25% of your account, which means that effectively you're about to lose $2,500 of your profit. Does anybody here want to lose $2,500 of their profit?
Nope.
Okay, cool. So that is the advantage of the hedge. The advantage of the hedge is that you've protected your account and your profit. Then I instruct my clients that this is what I do. I then, when the second candle opens above the ATMA, I then set up the robot with new magic numbers. And then I use the profit of the new magic numbers to strip away the buy and the sell trades that created that hedge. Or I just strip away the sell. Because sometimes the price now goes above and then I've got buy trades that are in profit. Why close them? Especially on gold, because gold is a storage of value and the price is increasing. Let me draw it for you, because it's a lot of words. It's a lot of words, and I know that. So we need to draw it for you. Okay, so let's say you have a sell hedge down here and you have buy trades here. Okay, these are all buy trades. What color are these buy trades? Numbers. What color are they?
They're all negative.
Really? They buy trades.
Blue.
Okay, so let's understand that, because you got lost somewhere. Look where the price is. The price is here. These.
Sorry, I thought the price is down at the hedge.
No.
Yeah.
So this is negative. This is positive. This is getting redder and redder. Okay. Let's say we're at an all-time low. Okay, not an all-time high. Let's say now the price has come down and we're in a perfect position. The hedging is like a perfect opportunity for you to double, triple, and quadruple your account. You just need to gain confidence. This is why on the videos I say to you guys, hedging is an inevitability. Start messing around with it. Start playing with the hedge, understanding the hedge on a lot size of 0.03. Can you stomach 0.03? Is there anybody here that cannot stomach a trade of 0.03 on a cent account?
Can do.
You have to be honest with me now, guys. I'm not here to judge you. I'm here to help you. If you're honest with me, I can help you. If you hide your feelings and you hide that your fear, I can't help you. Okay? So this is a safe space for you to be honest, for you not to feel like you're going to be judged here because you don't understand something. Okay? Okay, so I get that what I'm understanding from you is that everybody is comfortable with a 0.02 lots. Okay, so let's do that. Look here. Okay, yeah, your buy's in profit. These are all negative. These are your sells. They're negative. So now you can use a bit of profit here to offset some of the sells. And all you're doing is you protected your capital. You used profit from this to remove this. Your equity doesn't move, your balance doesn't move, your margin percentage goes up because you've got less lot sizes open, and your margin level increases and your margin percentage increases because you've got less trades open. So the robot can start opening bigger lot sizes. You're making bigger profits per day, and you can then start stripping faster and faster. So what seems to be a 6-month time frame to strip the open trades and the sell looks like a 6 to 1 year time frame. But as you start stripping with the new profits, the time collapses because the robot is opening bigger lot sizes every time you strip the open buys and sells. But I wouldn't be stripping away from the buys because the buys are in profit. So if the buys are in profit, these trades here, why close them? It's a huge opportunity, especially being at 3967 and the all-time high being at 4300. Who doesn't understand that concept? So you all understand the concept. Gert, Joni, how's it? Pastor T. Dolan, how's it? Cool. Okay. Talk.
The only problem is when your hedge is right at the bottom, it doesn't go into profit.
No, it won't. And that's because you're hedging too late. It's not that. I know what the challenge is. Okay. This is unfortunately an amateur move. I don't know if you have done this, but I would say 99% of my traders do this. They get hedged over there. The hedge turns blue, and then they see the blue and they close it, and then they re-hedge down here. So they've banked profit, okay, because they think that the trend is going to reverse, so they close their hedge out. They think. So they close the hedge out, they've made a bit of profit. Then they get jittery because the candle lengthens, and then their drawdown increases, and then they re-hedge. Then they think again that the price is going to reverse. The hedge is maybe going to go negative, or they want to bank that profit because they get excited and they see this profit over here gaining traction, and they want to bank that money, not understanding the consequences. So they close it in profit, and then they re-hedge, and they keep on repeating this process until the price really does reverse, and then you've got a trade at the bottom. If this is you, tell me it's you, okay? It was me.
So I've got that situation, but it's because that wrong setting was on the robot where as it hedged, it kept closing profits and opening new hedges automatically. In that time frame, it did about 10 times, it banked a whole lot of profit. And then,
so that's on MA reversal. On the MA reversal,
yes.
A close hedge equals true.
True, yes.
Okay, cool. So that's unfortunately a user setup error. Unfortunately, not understanding what that meant. And it is difficult to understand that because you join and you are thinking that this is possibly the best setup. I get that. So it's a tough one for me, and it's a tough one for my clients, because you're paying a subscription and you want to make money as fast as possible, expecting that the robot has been set up correctly and that you won't be in a situation that is going to be harmful to your account. But retrospectively, Rajiv, okay, you've made a lot of money from those hedges opening and closing, have you not?
Yes.
So why don't you just use that profit and then offset the hedge? For new clients is not there to make money. The hedge is there to protect your account. That's the sole purpose of the hedge. It's not there to make money at all. For experienced traders, it is an unbelievable opportunity when you understand, okay, hedge trading properly. You can start using the hedge strategy. Cheers, Rob. You can start using the hedge strategy to double, triple, and quadruple your accounts.
Yeah, so that's what I did. As soon as I realized that, and I got back to my desktop that afternoon, I closed half the hedges just with that profit. I didn't close everything because I thought it may be a reversal again when we had that meeting the other night. I didn't want to be fully exposed to any reversals. So I closed half of all those hedges just with that profit. And that's how I left it till now until I know further what's happening.
So are you saying that your thought process and the communication on the group of the reversal happening was correct, and now you're stuck with the hedge at the bottom?
I'm stuck with the hedge at the bottom, but only half the hedge now because I've used the profits to close half of it. I stripped half of it away already because I banked a lot of profit doing that hedge.
So are you still left with profit?
I'm still left with profit overall, but I'm just...
No, I'm talking about, are you left with profit from the profit that was created from the hedges that closed automatically?
Yes, I still have some profit on that, yes.
So why don't you just use all the profit to reduce that hedge?
So I thought that potentially, you were saying on Friday and potentially today, there could be a further drop down. So I thought if it sinks down quite low, I don't want to be fully exposed with my buys. I'll be half exposed with my buys. But I also don't want to wait too long because as the price moves away from the hedge, the cost of closing it will increase. So I'm in that dilemma. Close it quicker, but if there's a reversal now going to the lower 3.9s, then I don't want to be fully exposed in my buys.
Okay, 1 second. I want to show you something. I'm just going to unpause, just stop. Right, so there's two schools of thought here. How to close out. You've got lots of buy trades that if it does reverse could be quite catastrophic for your account. Okay, so this is a live account. It's got $2,000 in it. My robot is off, and I will now switch my robot on, and I will show you what I'm doing in this account. So there's $200 deficit. Start the robot. 2 trades or 3 trades will open, and where is this account? Okay, let me set it up on my, okay, let's go to a 4-hour chart. Go here, chart window, 4-hour. Right, okay, so let's actually enlarge. Okay, so there are gaps here. Okay, there are gaps here at this price here, quite high up. So whenever I make $5, okay, or $10, account history, let's go to the bottom. Let's go up a bit. This is in day order, yes. There, 393. Closed that, and this one, closed it in negative. They high up here, okay? High up here. What price was it that I closed it? Bought it at 4091. Let me check that. Bought at 4091, closed at 4012. Okay, so that's $80 away odd. Okay, so I'm closing those. I'm using profits. I'm closing them because if the price goes against me, I don't want to rack up a huge drawdown, okay, of whatever. I want to contain my drawdown, and the only way I can contain my drawdown is starting to eliminate some of my buy trades. So I make profit. I'm not hedged on this account, so I'm closing out buy trades at the top when the price, these trades are old magic numbers, which I'm leaving, okay, and then this account will start looking like my other account, this account, my main account, one of the main account that you guys know, okay, which is the rule 2, that one, okay, where there is blue. I don't ever want to see red again on top here. It's a different psychology. So you need to start strategizing, okay, that you never have red here and it's always blue. And then when you have like an uncomfortable situation, an inevitable uncomfortable situation of a hedge or something, your psychology is different because it's minuscule in the grand scheme of things. What do you feel about what you've learned today?
Yeah, I definitely didn't consider the buys, closing those buys, because I thought, when it heads up, I'll be able to recover those. But yeah, that's a good strategy actually, just to keep the pressure down on not having those very extreme buy trades holding me up.
Yeah, there's no 100%. I mean, you got to try, guys. I never sold this as 100% passive. I never sold this as 100% automated. I hope you concur with that. I hope you don't feel like Martin or myself pulled the wool over your eyes when you got into this program. I think we've both been extremely honest with you and told you this isn't a get rich quick scheme. This is get rich for sure, with a strategy, assistant, tools, mentors, and a community. And that there's no such thing as 100% passive. Not even property is 100% passive. Okay, not even private equity is 100% passive. You have to manage the people that you have private equity with. Private equity means that when you have lots of money, you invest in companies, and you basically sit on the board of directors, and then you're top level strategy and discuss stuff, but you're still managing with those people. You're not leaving anything to anybody. If you have a property, you don't just give it to the managing agents and say cheers. And when they come back to you and say your house needs repairs, you don't say, oh, too bad. If you don't look after the property and you don't attend to breakages, etc., you're either going to lose your tenant, the managing agent, or the property, all three. It has to be managed. There's no such thing. It is a fallacy. Passive income is a fallacy. I think it should rather be called annuity income rather than passive income. Does anybody feel like, I don't mind being called out if the message that you received is not on point? We need to know, and that's the only way we can improve. Does anybody feel like they've had the wool pulled out over their eyes, where they feel like this is not what they signed up for, that this is a lot of management? We never said that this was going to be no management. It's an open forum, guys. I do not mind being called out on anything. This is what makes us better than anybody else, is that we take responsibility and we're able to have these hard conversations.
And we want to be called out.
100%.
We get it wrong, call us out, please.
100%. It's the only way we can improve. Okay, so does anybody have anything else to add or questions to ask?
I want to just make an observation. Most clients who find themselves in more trouble than they should be are all saying the same thing. Oh, but I thought the price was going to go this way, or I was hoping the price was going to go that way. So we got to stop. We got to stop hoping, because if we think and we hope, we may as well go to the casino and hope it's going to land on red. We got to use the tools that are there to say, well, the chances are that the price is going to go that way, and if it goes that way, then this is what's going to happen. But like a game of chess, I've also got to say, if it doesn't go that way, what are the implications? And we've got the tools. They are all there. They're built in. We just need to take the time to study the videos, study them again and again until we understand them properly, and we can trade safely.
So I always look at the negative. I'm not really interested in the profit. I'm always interested in what my risk is on the account. How much am I going to lose? If something goes wrong, what is the risk to me? A lot of people are not doing that. They're looking at the profit rather than the loss. And we can see that by the MetaTrader 4 posts on Discord, on the testimonials group, of your lot sizes and your risk in relation to your capital. That some guys are way over leveraged because they are looking at the profits rather than the losses. And I'm very risk averse. Okay, hence my account is blue. So my psychology, I think, is very different to everybody else's, because I have this profitability and I am I'm not nervous. Like, I've got lots of open trades, guys. Lots. Now, if this was your account, okay, and you didn't have the blue, okay, I think it's a totally different psychology then. Do you agree or do you disagree? Give me your feedback. So that's what's different with me. But I'm still, on this account, I am closing the trades out as well, like here. Okay, there's a big gap here, and there's gaps over here where I'm starting to close out those trades in a negative. I'm using new profits to close out trades. Yeah, so we've made some profit today, $57. So it doesn't help me at the moment to close out anything. Okay, yes, I can partially close this out, okay, by $50. So I can close out 20% of this trade. I can do that and start getting rid of trades right at the top, 41.51. But if you really think about it, 41.51 is not that bad, considering we're at 4,300 and everybody's talking about 4,600, 4,800 and 5,000. But from a drawdown perspective on your account, if I was in the position where I didn't have blue, I would start definitely using my profits to start eliminating trades. Now, there's two ways of doing that. You can do it on a LIFO or a FIFO system. You're all, I'm sure, understanding what LIFO is and FIFO. For those of you that don't, LIFO is last in, first out. FIFO is first in, first out. So if you're eliminating trades from the top, it is first in, first out basis. So you're closing the trades that are at highest. Now, there's an advantage and a disadvantage to that. The disadvantage is that when you close out a trade, you can only close out one trade or half a trade or a quarter of a trade. Now, if I did it as last in, first out, as in the closest trades here, so here I could close out two trades and eliminate two of the trades. But we're so close to being in profit in those trades, what's the point? Like, I don't feel that there's a point. So maybe higher up, okay, maybe like this trade, okay, 4038, what's the price? It's $30 away, okay? So this trade we bought at 4038 and the price is 4,000 currently. So we're $38. Still, it's like so close, $38. We have a movement on a daily basis of between $30 and $50. So the chances of these trades going into profit are high. So there's no point. Okay? So you can choose, like up here, you guys have got to choose, and then you can start eliminating some of these trades using new profits with new magic numbers. Because if you close the trade with your existing magic numbers, do you know what happens?
It opens another trade.
Correct. It's a replacement trade. So you're not in a better position. You just got a new trade right at the bottom where the price is. If the price falls, that trade's going negative and you've used up margin percentage. So this is why I change magic numbers and then I start removing trades from old magic numbers with new magic numbers. Then my account is safe and it's like starting to get under control. So you
what
have
happens when you change the magic numbers? What happens to the old magic number trades?
They lost. That's why you've got, okay, the hedge functionality of global hedging. It's a live account.
So it won't hedge against those anymore once you change, because that's not on your chart anymore.
I'll show you now. GTC 8036. Okay, cool. You have the setting here, global.
Yes.
Global. That looks at your entire account, not magic numbers. Magic number is chart specific. Okay? So if you set it to global, you must do this especially if you've changed magic numbers. You can't do chart lots anymore. Or what you can do is
open a new chart with new magic numbers rather.
Sorry, Al.
Yes.
Does it not have to be on the setting that says hedge non-rule 2 trade?
No, because they are rule 2 trades.
Okay, even though they're different.
Correct. So there is a.
Sorry, just dumb this down for me. If you're saying hedge global, even though it's different magic numbers, because it's a rule 2 trade, it'll still hedge that trade.
Say it again.
If you're setting it on global, you've now opened new charts with new magic numbers. You've got trades on your old chart with old magic numbers. If you set it on global, even though it no longer recognizes the old magic numbers, it still recognizes it as a rule 2 trade.
Yes.
Okay, thanks.
Okay. So what you can do is you can open up a fifth chart. So some of you don't want to be on your charts. You don't want to be. So you hedged, okay, and now you open up new charts, and your new charts, maybe you want to be hedging those also charts specific. So now how do you deal with your old trades that aren't hedged? Like if there's a price spike against you, those trades are going to go negative. But your new charts are set up hedge chart specific, and your old trades are going to be lost in the wind, and you can land into trouble. So how do you fix that problem? How do you overcome that strategy? I want you to answer me. I don't want to be answering you.
You can use a global hedge, or you can open the new magic numbers on a new chart.
No, let me say it to you again so that you understand. You started trading.
Right.
Okay. You had 4 charts. Each of those charts were set up to maybe chart specific hedging or global hedging on one chart.
Right.
You get hedged.
Right.
Now you set up 4 new charts, and you've now set up those 4 new charts to hedge chart specific. So the old trades, if something happens to the price and you aren't hedged on those old trades, if something happens to the price, that those old trades are lost trades, and your drawdown is going to spike if the price goes against those trades. So how do you deal now with those old trades if your new charts are set to chart specific? Do you understand the question?
Yes. And you're saying you don't have all 8 charts open, you only got 4 open.
Yeah, you've only got
closed
4
it.
charts.
Right. Okay.
Can you set a manual sell trade acting as a hedge?
Now you're manually trading. So now you have to manually
Correct.
Manage
that hedge.
Yeah, so that's the incorrect answer.
It is an answer. It's not the answer I'm looking for.
Yeah.
I'm saying if you want to manage the hedge by the robot, what is the strategy?
Use the strip.
Global is the only way then.
Okay, so you've got 4 charts open, but your new 4 charts, you don't want to use global, you want to use chart specific. How do you then manage your old trades?
By setting up chart specific hedges on those.
So you want to open up, so it has to
Yes,
be
it has to be
4 charts. Correct. It has
Yeah.
to be 4 charts to manage those trades.
Yeah, so you need 8 charts open to manage all by chart.
Yeah.
That's the only way.
Yeah. Do you guys have any questions? I think I've been quite thorough with this.
Okay, I've got 3 questions.
Yeah.
Okay, so if my lot size is low enough that I don't get nervous when I go into drawdown because the price goes south faster than drawdown in inverted commas. What is the benefit in that case?
I don't understand your
Yes.
question up to that point.
Okay. My percentage risk is 0.02%.
Okay. MM equals
MM1 0.02.
0.02, right?
Yeah. So if I look at my drawdown, the lowest that it reached globally now with this downswing was 19%. And my margin level was, if I remember correct, 7,200%. So my question now is, why not just leave it? Because it can go about another $600 before my margin would reach 2,000. But bear in mind, I have reduced my number of open buy trades to what is open at the moment. So I'm stopping the bot then to trade because it goes south. So you see, that is where I've got the difficult question that I can't answer to myself, because I would assume if I've got hedging, if I'm using hedging, I can still open new trades and make profit again sooner when it goes north again, which I won't be doing if I'm following the strategy that I was using.
So what is your question?
My question is, if I've started hedging earlier in the downtrend, could I then leave the number of buy trades to a higher number so the bot will keep on opening new trades? And if I've got a second hedge percentage and a lower, will that allow me to keep making profit that I can obviously use to reduce my loss if the hedge is against me?
Okay, I'm going to answer this in multiple ways. Okay, so firstly, I now remember why I set the hedge up at drawdown and not the second candle below the ATMA. It's because of your exact question of when is the right time to hedge. So if you've used the incorrect lot size, when the second candle opens below the ATMA, you may have already blown your account, or the equity protector may have kicked in. That's why I changed it to drawdown and not the second candle, because I wanted to make sure that everybody got hedged and nobody's equity protector kicked in.
Understand?
Okay, so it's all to do with risk. Okay, when is the right time to open the hedge? This is an understanding of chart analysis. You can't be hedging, in my opinion, like you also need to be looking at the demand zone and the supply zones. Why would you then? That's why I removed my hedge, if you can remember. So I was hedged by, I think it was 84 lots or something, or 74 lots, double hedged. And I closed the one hedge. The second hedge closed out at 0 because it had a stop loss. And that was because we were on a demand zone. And I thought, if this thing goes north, then I'm going to be stuck right at the bottom of the trend. And that's when I decided to post a poll, who needs help with hedging? So that you could rather understand chart analysis is the key here. That's why I'm saying to you, when the second candle opens below the ATMA, that is the correct time to be placing the hedge, if you have used the correct wallet management. So no one can say to you, when is the right time to hedge? It's got to do with chart analysis, got to do with your risk appetite, got to do with a couple of things.
Can the robot be set to hedge at second candle below or X percentage drawdown, whichever
Yes,
happens?
I think it can.
Okay.
Where am I? 8036. So, hedge, moving average, and chart drawdown. I've tried to think.
Kicks in first, we'll hedge.
It's your moving average. Your percentage drawdown has to be met together with the second candle below the ATMA, or however you've set these settings up here.
And can we do either or? So either when the second candle opens below or when your drawdown hits X percent?
No, it's both together. It's not either or. It's not an either or statement. This is a both together statement. I hope I've answered your question, Fritz. If you want to, I don't think I have though. If you want to rephrase your question after I've given you what I've given you in my last statements.
Okay. I'm going to go to a second question, and I think if I've got the answer to the second question, might be clarifying what I've already asked. And that is, you've mentioned in the conversation today that it is possible, if you use hedging correctly, you could double, triple, or even quadruple your balance.
Yes.
Is it possible that you can take us through how that is done, what you mean by that?
Okay, cool. Okay, cool. Let's say, so Fritz, I'm going to rely on you and your mathematics here, please.
Okay.
You've got a 10 lot.
Yes.
Okay, so for every 0.01 lots, your account moves by 1 cent. So on a 1 lot, it's 10, on a 0.1, it's 10 cents, and on a 1 lot, it is $1. So on a 10 lots, it's $10. This is per cent that that gold moves. Okay? So this
Okay.
is per cent. So the second candle opens below the ATMA.
Right, I got that one.
At this level here. Call it 4180. And then the second candle opens above the ATMA. Call it 4073. How many cents is that?
So the difference between
Yeah,
four
so it's
one zeros.
4180. I don't
Yeah.
have a calculator on my dashboard. So
No,
let's
that's
do
fine.
that.
And the second one?
So call it 4073. So your hedge opens at 4180. You close your hedge at 4073.
So it's 190. 90. Let me quickly do the calc.
So it's 4180 minus
That's 107.
4072 is $108 times 100 is 10,800. Okay. Times that by $10. So it's about $1,080 that you've made profit on this trade. If your account is $10,000, okay, then you've made 10% profit. Are we on the same page?
That is if you close the
Hedge.
that sell.
You close the hedge because the second candle has opened above the ATMA. You see, a lot of you guys aren't doing the strategy because you don't trust my strategy yet. It's who is Alan? Who the fuck is this oak? Can we trust him? What is the strategy? I've never heard of the strategy. How can I put $10,000 in my account, okay, and trust this oak? And I get that.
Isn't that what the bot was doing with Rajev's
Yes, but
trades?
on a 1 minute chart.
Yes,
So
yeah,
he's-
I agree.
So that's not the right time to be closing the hedge
I agree.
because the trend hasn't reversed.
I see. So we only do that when the trend reverses.
This
We've
is
got
my
confirmation.
strategy. I believe that my strategy, I haven't found anybody in 11 years that can beat my strategy with the length of the trades in pips, which is profits.
Correct.
Everybody out there is using a strategy. It's a 2-to-1 risk reward ratio against you, which means what they're doing is they're putting a take profit at 15 pips and a stop loss at 30 pips.
Now that means nothing.
To you,
What I mean is you can't rely on that because it all depends on the momentum of the transactions, the momentum of the direction. So sometimes it will go much faster. So 15 pips will be reached much quicker than other times.
I just think it's a dumb strategy.
Yep, that's what I'm saying.
But most traders have been trading this way. You can ask your question. Most traders are trading that way because that's how even the Forex companies teach.
Correct.
Anything that the Forex company is teaching you is not to your advantage, Oaks. They run a business. Okay? Their job is making money off your trades. So the more trades you make and place, the more money they make. So for them, it's a great strategy. For you, it's not a great strategy. I found this to be the best strategy out there. There are lots of strategies, millions, billions of strategies out there. When somebody says to me, can you program the robot to do the strategy? I say, do you have back tests on a live account of that strategy over a 3 to 5 year period? The answer is no, they don't. And my strategy is not 100%. It's about 85 to 90%. What makes my strategy 100% is the hedge function and the hedge strategy, because you've hedged your account, there are no losses. So it's 100% profitability on that strategy. But the second candle for me opening below, it's a sell. The second candle opening above, it's a buy. If you're watching the chart analysis group, I explain it to you, I show it to you, and I prove it to you.
I mean, I saw that. I agree 100% with that. So now it starts making sense why I should be setting the hedge functionality and as a percentage, and then when
I don't know if the percentage is the right way to do it, because let's say you have large candles. Okay.
No, I mean percentage hedge, like a 50% hedge, a 50% hedge.
Okay. That is a definite, if you're doing it that way, it's definitely an easier way to manage the trades if the price reverses against you, because you've only got, let's say, your first hedge is 25% of the account. It's definitely easier to manage the account that way. And the second trades, second, third, and fourth trades to get you 100% are also easier to manage, because let's say your first, second, and third hedge opens, okay, then your fourth hedge opens and immediately the trend reverses. The second candle opens above the ATMA. I'm going to draw another line here. This is one hedge 25%. This is your second hedge 25%. And this is your third hedge, and this is your fourth hedge over here. Okay, so your fourth hedge is 25% of the total lots that you have. And then the second candle opens above the ATMA. I'm going to move this down a little bit for just this exercise to understand it. But even if I didn't, okay, you've got two hedges in positive and two hedges in negative. It's probably a zero-sum game. And now you've closed out your hedges. You've got no hedges, and you're in an upward trend. And the chances of the price continuing north is about 80%. Can we agree on that?
I agree 100%. But for me personally, if I do that, the benefit is that whilst it's going down, I can even my bot can even can open trades quicker when it turns up again, because currently I have to wait out a longer period. So now it makes sense for me.
I don't understand. Can you go through the strategy slowly so I can understand?
So what I
so you hedged 25%, and then
no. I mean, the current way that I protect my account is to limit the open buy trades. So if the price goes further south and it turns and it goes positive, I don't have available buy trade slots, so to speak. So I have to up that number.
What do you mean buy trade swaps?
I think he means the max number of buy trades.
Yeah, max number of buy trades. Sorry, thanks.
It's a strategy. My strategy is 20 trades open at any one time per chart.
Yeah. See, I've got mine lower than that. Hence the reason my bot is not trading at the moment.
So I'll tell you what the disadvantage is of that. Okay. So let's say you have trades that are traded here. 1, 2, 3, 4, 5. Okay. You've got your max trades now. The trend reverses. And now there are no trades. Okay, this is a hedge trade, this is a hedge trade, and this is a hedge trade. And within this area, there are no trades.
Yeah, that's exactly what I'm saying.
Okay, so it's blank. Okay, so now some of you are using a take profit, which means that your take profit line is about there. If you're using take profits and you understand the robot, your take profit line is about there, miles away from the price.
Yep.
You will. So you've got nothing happening here and negative trades over here. And your robot can't open trades anymore. So you're waiting for the price then to spark north, okay, into this area. Sorry.
Yeah. That is
You're
exactly
waiting
what I
for the
was
price
saying.
to spark north here for these trades to go into profit again, and then you can start making money. So the disadvantage of the strategy is that could take a day, a week, a month, 3 months.
Correct.
So you're not making money now. All right. Maybe a better strategy for me would be then waiting for the second candle to open above the 8 EMA and then increasing my maximum trades to 10. That means in this area here, I can start making profit. So trade opens, price goes up, second candle opens below the 8 EMA on a 1 minute chart. If that's what you've set it at, close positive trades when the second candle opens below the 8 EMA on a 1 minute chart, and then all positive trades close. Price come, and then it immediately starts opening up new trades on the way down. Okay, so let's draw it. So let's just do it in this area here. Okay, so second candle opens in this area here. Here, candle 1, candle 2. Second candle opens above the 8 EMA, right? You now restart the robot and you set the robot to 10 open trades. Now the 5 are used up here, and you don't want to wait for the price to come up here. You want to start trading and making money. So the robot opens a trade, price goes up. Okay, second candle closes below the 8 EMA on a 1 minute chart. Let's say it's there. So let's say this candle sparks up here. All right, this is on a 15-minute chart that we're looking. And then the second candle opens below the 8 EMA on a 1 minute chart. 1, 2, there's a 1 minute chart. This trade closes and a new trade opens over there. Yes? Are you with me?
Yes, yes.
Price continues to go south. Price continues to go south. There, red. Okay. And then a new trade will open over here.
Correct.
Okay. Then it carries on south, carries on south. Okay. Sorry. Carries on south. Okay. You've got 4 trades open. And then the price sparks north. The trades turn positive. Second candle closes below the 8 EMA. These trades then close out in positive, and the process is repeated, rinsed and repeated, until the price then goes south and you've used your 5 trades. You've got 5 more trades open, which is 10 trades because you've got trades at the top. Okay, 1, 2,
Yes.
3, 4, 5. Okay, the price continues to go south down here. No more trades open. When the second candle opens above the 8 EMA, you can then set your max trades to 15 trades and then carry on. And this is a great way. I like the strategy a lot, by the way, to dollar cost average cleverly on the chart. It's a very clever strategy, but you will not make as much money, and you need to be okay with that. You can't have your cream, your acid without the cream, or you can't have the cream without the acid, unfortunately. There's always going to be negatives to the strategy that you've chosen, and you've got to be okay with it. You've got to say, all right, cool, that's how I set it up. I'm not disappointed, but I think there could be a better way of setting it up. You've got to, everybody, try and remove the negative emotion, the FOMO emotion. Shit, man, I should have done this. Flip it. If I only had done that. That you've got to stop, because that is a very dangerous emotion. That emotion, so you've got to try and remove that emotion, okay? And be comfortable with the strategy that you've chosen. If it's not a suitable strategy, you've got to say to yourself, this is where trading psychology is so important. You've got to say, it's interesting, Okay, I got what I did. I'm happy with what I got. I think let me try a different strategy and let me see if I can get a better result. This is why having a trading journal, understanding what the robot's doing, and not it being so random. Because then you're leaving your emotions to be random because you haven't planned anything. You don't understand the robot's doing this, you don't understand, so you're emotional. If you understand what the robot's doing exactly and you're comfortable with that strategy, can there really be emotion attached to it?
No,
Okay.
he is not.
Okay. So are you guys comfortable? I know Rajiv had a question. Fritz, let me take Rajiv's question, then I'll come back to you.
100%.
So just a quick one. I see that there is a setting for close hedge trades on ATMA on the 4-hour chart, which mine is set to false. If that was set to true,
Can you show me where that is?
On the section.
Oh, you're
section
talking about
11.
remove hedge trade.
Yeah, section 11. So what you're proposing, if we just have that set to true on the 4-hour chart, then it would automatically close the hedge trade. Am I correct?
Correct. So let me explain to you the strategy. Okay, there is this functionality here. Remove hedge. All right. When the second candle,
all 4 hedges, I'm doing the partial.
once
25, 20, 25. If I did 4 25% hedges, like the example you were giving, would it remove all 4 of those hedges at the ATMA?
no, you can set it here to positive, negative, or both.
Yes.
Okay, so let me explain to you how clever this strategy is. You set it that when the second candle opens above the ATMA to close your trade if the trade is positive. The trade closes. This strategy disables, okay, hedging because we've done it this way because if you've hedged on drawdown, as soon as you close that hedge, a new hedge is going to open.
Yes.
Okay, so we've added this disable hedging after closing, and then there is an insurance trade where it is the consecutive flip. So if the second candle opens below the ATMA, if this is true, it'll re-hedge your account 100% or however you've done it. Input at level. Just want to see what the multiplier is here. Okay. The swing high of a candle, the swing low of a candle, or the price or consecutive MA flip. So when the second candle opens below the ATMA on whatever time frame you've chosen, hedge, re-hedge. All right. That's the insurance hedge. If you put it on a 4-hour chart, then it'll hedge, but your drawdown may get bigger. And then it's got your disable insurance hedge rules. This was created. Yeah, so if you're in an uptrend, and you feel like there's maybe a demand zone and the second candle opens below the ATMA, but you're at a demand zone, you can disable the hedge, the insurance hedge, because your hedges have now been your main hedge functionality has now been disabled until those hedges close.
Right.
Okay.
Okay.
Cool.
Thank you.
Okay.
No, you've covered my last question that I wanted to ask. Thanks.
Okay, cool. So did you guys find this informative?
Absolutely, yes.
Are we done, guys?
Yes. Good.
Thank you very much, Alan, for your time. Appreciate that.
Okay, cool. 100%.